This is Kali Persall, editor of Institutional Investing in Infrastructure, here with Sam Warfield from Pennybacker today to talk about the effect of tariffs on value-add infrastructure. So, Sam, just to kick off, do you want to say a few words about yourself and your role at Pennybacker to start off?
So Sam Warfield, I head infrastructure at Pennybacker. We're a middle market real assets firm based in Austin, Texas. So having strategies in both real estate and infrastructure.
Yeah, welcome back. It's good to have you on again. And a lot has happened since we last talked. Last month, as people know, the Trump administration imposed a 10% tariff on almost all foreign imports to the United States. Shortly after that, there was individualized reciprocal tariffs imposed as well. So just what do you make of this from your view? And how are you seeing it impact infrastructure?
Listen, the tariff announcements, particularly in early April and quote unquote Liberation Day, definitely caught, both public markets, private markets, and infrastructure by surprise as far as the magnitude and breadth of those announced tariffs. Now, what's happened since then, the markets have started to find a little bit of footing because, of course, there was a pause in the effectiveness of those early April tariffs going from 10% to something materially higher. And the deadline today is July 9th when those tariffs will be effective. And I think the thought process is, and we saw this with the US UK deal announced on trade, we do expect there to be, country to country negotiations, one-on-one type negotiations, ultimately to find some sort of middle ground on the percentage of tariffs and frankly, what's included and what's subject to those tariffs. So I think there's going to be a lot of action, a lot of volatility between now and July 9th, hopefully headed for maybe a more kind of predictable path forward as far as tariffs are concerned, at least more certainty, right? The market definitely craves certainty in these type of matters. But the breadth and volatility of the announced tariffs in early April have definitely had an impact on our market.
Yeah, thank you for weighing in on that. It's definitely something to watch. Do you want to talk a little bit about the potential impacts to your portfolio companies or things that you're seeing that are impacting Pennybacker directly?
Think like most folks in the space, we've spent a lot of time since the announcements, frankly, even before the announcements, analyzing potential tariff impacts across our portfolio, as well as, new investment opportunities, things that are in the pipeline. And I think maybe from a macro infrastructure perspective, not going into kind of second order and third order impacts from tariffs, inflation, labor rates, et cetera. I think there are some verticals of infrastructure that from a high level perspective, you would say are better positioned or worse positioned based on where the tariffs are the highest, frankly, from a supply chain perspective. I think as we've kind of really dug into it with our own portfolio, and looked at kind of new investment opportunities, I think the real answer is a little bit more nuanced, to be honest. And I think it requires, frankly, an analysis of that specific kind of portfolio company or specific investment opportunity and what's the underlying business model. Is it contracted hard asset business? Is it a services business? Is it just a manufacturing business? I think that's like the first layer of analysis. And then the second layer of analysis, of course, is, really what does their supply chain look like? And so, from our perspective, and as we kind of see things, getting into that next level, you see a bifurcation, frankly, between kind of existing infrastructure assets or businesses. So existing, think about it as existing operations. And really the punchline there is, I think, very low to low impact on tariffs on that part of the business. Yeah. Where you really see the more substantial impact and we'll talk through this here in a second, is related to development projects or growth projects. Because there, if the supply chain is more domestic, it may be a very low impact on those potential projects. Like CapEx is only going to go up a little bit. But you could have projects that are sourcing most of their equipment from China, and there the impact is quite substantial. And so I think it requires that level of kind of analysis. We're focused, intentionally focused on investing in contracted hard asset businesses. And so that's kind of how things fall out for us, which is existing operations, very low impact from a tariff perspective. And then as you get into growth projects for each of our portfolio companies, you have to really dissect each of those supply chains. I think we're more fortunate than a lot of folks as we have, high percentage, 85% plus of kind of domestic supply chains. But you really have to get into that granular detail to kind of understand truthfully the tariff impacts. And as we said at the outset, it's changing day by day, almost minute by minute, in this type of market.
Great points. Yeah. Was there anything else you wanted to add, future facing, or um, anything else that you think people should be aware of?
Yeah, I think, the first assessment on tariff impacts, of course, is what is the impact to your portfolio companies or to new investment opportunities that you're looking at? And so you can kind of take what is the tariff from this particular country? Is the, good included in the tariff? Okay, that's the actual quantifiable impact. What we haven't talked about is what actually folks that's sitting in my seat and kind of the management teams that we are backing can do to mitigate those effects, right? And so I think there are really three that are talked about. One's diversifying suppliers, so diversifying away from those, higher tariff jurisdictions. Two is sharing costs with your suppliers, and we're already starting to see this where there's a 50-50 sharing between the customer and the supplier. And lastly, there's the ability in certain business models to pass along some, all of the increase to customers, right? So, there's kind of a kind of multi-layer analysis as it relates to kind of tariff impacts. I think that, it's still a burgeoning story, and we've got a lot of uncertainty as far as how things are going to shake out. I do think that infrastructure sponsors, particularly folks in the value add side of the world, are going to be able to use these levers, diversifying suppliers, sharing costs with suppliers, as well as passing along those increases to their customers to mitigate kind of the most material impacts from tariffs.